one other company, Reamer Insurance, was going to propose, and then they pulled out at the last minute for unknown reasons. So I'm going to present the two proposals that we have in hand. I've presented those in a spreadsheet to the board of directors, but I'll go over them quickly so the audience can follow along, hopefully. The first section of it deals with the citizens' insurance, which is the windstorm, handle the hurricane if you have a hurricane damage and so forth. And I'll go Wells Fargo first, which is one of the agents, and then Brown & Brown, which is the other agent. The insurance premium being quoted is based on a replacement value of the property at approximately $83 million. The deductible being quoted is 3% of that, and the premiums go as follows. The property, $206,444. The special property, which covers exterior fountains and so forth, $33,813, and the miscellaneous property, $9,452, for a total property insurance of approximately $250,000. This is Wells Fargo's proposal. Brown & Brown, their proposal, for the same value, the same deductible, for their property insurance with citizens, they have quoted $194,000. For the special property, $28,971. And for miscellaneous property, the same as Wells Fargo, of $9,452, for a total of $232,597. Then we've got the other part of the insurance, which deals with the general liability should someone be hurt on the property, and this covers any suits and so forth to the association. Wells Fargo has quoted $85,000, call it $86,000 for the general liability, and also we've got one vehicle that's been covered under this insurance. There's a crime policy which covers staff should any theft or such take place, and this covers the limit on that is $700,000. The quote on for that policy is $1,018. The D&O policy, which has a limit of $1 million, basically this is a policy that covers the directors and officers of the association should they be sued for anything by the unit owners or any other party. The limit, as I said, is $1 million on that. The policy premium is $666. This is Wells Fargo. Sorry, $6,666. The umbrella, which basically will take the general liability policy the next step up to $10 million. And that's an extra coverage on liability. And that policy, the cost limit is $13,893. It's very important because you've got a cap on your general liability of $2 million. Should any suits during the year exceed that amount, then this umbrella will kick in and cover those extra claims. The boiler and mechanical, basically this covers the equipment on the property. Should there be damage, fires, and so forth. There's a $100,000 average ceiling on each of the, and I've got a listing of all the equipment. The policy premium is $6,248, and Wells Fargo has offered a workers' comp at $562. Going over the same insurance line items with Brown & Brown, general liability, the same values are matched, the $2 million and so forth. With Brown & Brown, the general liability is $78,238. The crime policy, the premium is $1,225. The D&O policy, $4,623. The umbrella policy, $8,121. The boiler and mechanical, $2,487. Workers' comp, they did not quote. Workers' comp will be covered under KW's policy. The total other insurance for Wells Fargo was $113,877. The same policies quoted by Brown & Brown came in at $94,694. The total premiums, which would entail the citizens and the liability and so forth, the total premiums quoted by Wells Fargo, $363,586, and by Brown & Brown, $327,292. The difference between those two proposals was $36,293, a savings by Brown & Brown over Wells Fargo. The difference between the lower number and what we paid during 2008 is $54,000. That's a savings over 2008. What one of our agents did for us, just to give the board and the unit owners general idea, the quote I just referred to entails a deductible of 3%. Basically, what that means, should there be a hurricane or a fire or whatever the case may be, the association has to come up with 3% of the cost, which in this case would be $250,000. And that's the deductible on the whole property. If we were to increase the deductible to 5%, our premiums will be about $35,000 less. But should we have a disaster, we'll have to come out of pocket $415,000. We've got, well, and this is just a note, when we prepared the 2009 budget, we prepared it with the idea of spending $417,000 for insurance. We've got enough funds in the budget presently to cover the 3% deductible. And as your manager, I would recommend to the board to go with the lower deductible. It'll be less of a strain on the unit owner should there be a disaster. We do, yes.
I'm surprised the difference in premium.
Wells Fargo did, in fact, this is even lower than they came in with their first pass at it. When they found out about a week ago that there was another company bidding for it, they came back with lower numbers still. Yet Brown & Brown was able to come in at even lower numbers than they have. The citizens policy, we have no choice but to go to citizens with any agent. The difference there will be their profit margin, I assume. The general liability, both companies are offering the coverage through A++ carriers. Basically what that means, they're in very strong standing with the insurance industry. Each one of them are over, I think it's $1 billion in assets. So they're very strong, they're all rated. So that is comparable.
There's talk that citizens will be increasing its premiums. In fact, the state will insist that citizens increase its premiums. If we walk into a policy now, are we protected against that increase, or could they always come back later in the year?
In fact, what we may be able to do is the reverse of that. We may be able to go back to the citizens and have them reduce these rates, because what they have done here is they assumed an increased number for replacement costs. What we can do is go have an appraisal done by a professional, and they will give us a replacement cost which may be less than $82 million or $83 million.
Howard, do you have the names of the carriers of Brown & Brown?
I do.
One more question. That 3% deductible is per incident or per building?
As per incident, yes.
Howard, what is the
Directors and officers. Would you like me to go through the carriers?
Yeah, for Brown & Brown.
Yes, this is Brown.
Yeah.
Okay, for Wells Citizens, it's of course the state, so they're not rated. The difference in conditions, which basically is is an extension of the Citizens policy that's been carried by Lloyd's of London. This miscellaneous property that's been carried by Scottsdale Insurance Company. The equipment, which is the boiler policy, that's being carried by Hartford Steam Boiler Inspection. The general liability is being carried by Western World. The automobile is being carried by First National Insurance. The directors and officers, Great American Insurance Company, and the Crime Continental Insurance Company.
Their ratings are.
They're all ratings. Their ratings, excuse me. Lloyd's, it's A, and their financial standing is XB, which relates, it's over $2 billion. The difference in conditions, which is the Scottsdale, they're A+ and the same amount. The Hartford, they're A, and they're over $250 million. The Western World, which is a general liability, is A+, and the same as Hartford. Automobile, that's First National, they're A, and the same as the Scottsdale. Great American, they're A, and they're over $1.2 billion. And Continental, which is crime, is A, and they are over $1.5 billion. And they're all admitted companies.
Howard, do you have any opinion on this, or why is Wells Fargo so much higher? And how have we done with Wells Fargo this year?
In terms of?
Well, we just took them on. We've had them for a year.
Right. And as I said, I guess they were under the impression we would just automatically renew with them. And they sent out their proposal very early. And it was the first that we had, and then we had Brown & Brown come in. And somehow I guess in the industry, they know what happens. And Steve, give one.
Can I address this? So you have an understanding how the business works. Each agent works with all these insurance carriers. Some agents have better relationships with the insurance carrier because they bring in more volume, so they can quote them better rates. Right now, your agent of record is Wells Fargo. They could go out and quote all your policies to many different carriers, and what's known as in the insurance business, flood the market, to prevent any other agents quoting, because the same insurance carrier cannot quote two different agents. They can only quote to the agent of record. Okay? Wells Fargo didn't shop it out. In fact, when we talked to Brown & Brown, all their markets they went to for quotes, Wells Fargo never even approached them. So there are different markets that give them better rates. In other words, Wells Fargo pretty much used the same carriers that we probably have currently, or the ones that they have a relationship with, but they didn't really shop it out a lot until they found out there was another agency involved and fit in the process. That's what we found behind the scenes, that what was done via the other agents and the information we received. Loss runs are always run, which is basically a history of claims for liability. And usually the agent knows when loss runs are requested, but he wasn't even informed of it. So in dealing with Wells Fargo, my limited experience with Wells Fargo, they really haven't impressed me from the insurance side. That's why we felt that KW, we brought in some other companies that we feel could be a better rate.
Who decided that Brown & Brown should be our agent of record?
Well, nobody. Brown & Brown
They're not your agent of record.
Wells Fargo.
Wells Fargo.
Wells Fargo is the
Right
agent of
now.
record.
It was the agent of record.
Well, they're still until this policy's up.
So, but there was never a consideration that would change.
No.
No, we just shop it out like any other contract or renewal to get you the best price.
So they got alternate carriers.
Well, no, what Steve is saying, Wells Fargo hadn't even gone out to any of the carriers. So that's why Brown & Brown was able to get the quotes they have.
Where do we get our workers' comp from?
The workers are covered on
I don't even know
KW.
why they would even
Why would they quote that?
quote the workman's comp, because you don't have any employees. They're all under the management contract, and KW, we have
No, not to cover anybody else.
Well, in any case,
No.
okay,
You
if,
don't have to have all.
okay,
No.
before we get into discussion on that,
At the very end, you have to have
just
all.
before we get into discussion, if we look at the numbers, if that were a sticking point, the workers' comp is $500. So it's with $500 we can also have Brown and Brown quoted, and I'm sure it'll come.
You can't list non-employees in the association on the
See,
workman's
we
comp
have
policy.
to have workman's compensation. That is our protection if a musician falls, or some entertainer falls, which is done on your payroll, which is self-employed.
Those musicians, they're contracted and they're licensed and insured. They have their own insurance.
They have to submit a certificate of insurance before they come up.
Right.
We don't insure them, Martha.
And they ask us to hold it.
Security blanket.
No, they won't be able to go on the workman's comp.
They're not-
Those are only for direct employees of the association.
They're not hiring anyone. Workers' comp is only for people that can hire it, not payroll. If you have a payroll.
Well,
If
Steve,
you have a payroll.
so, what is your evaluation of Brown and Brown? What is their history?
I've done business with many insurance agents. Insurance agents are very hard to come by, like decent ones. I mean, there's agents at Brown and Brown I won't deal with. There's agents at Brown and Brown I will deal with. It's an agent business. It's not really a company business. So it all really depends on the agent. I've dealt with Wells Fargo. I've dealt with Brown and Brown. I've dealt with Cordia, Simon and Brooks. Brown and Brown.